Good evening, and welcome to this town hall meeting on facing the mortgage crisis. It's broadcast live from the Lee Theater at the Touhill Performing Arts Center on the campus of the University of Missouri, St. Louis. I'm Jim Kirchherr from KETC Channel 9, and during the next hour, we will be hearing from a panel of folks who are dealing with the mortgage crisis and the mortgage issues on a number of fronts: financial, legal, and personal. We'll be exploring the impact on our community and on the individual, what we are doing, and maybe what we're not doing. We'll be taking some questions from our audience here as well. And I want to mention this to our listeners, that in addition to the panel of experts in the Lee Theater, KWMU's media partner, KETC Channel 9, is hosting a phone bank. And I'm going to give you the numbers in just a moment. These are not for you to call in to this broadcast and share your story. These are numbers where you will be able to speak to people directly, personally, and privately for any questions you might have, any problems you might want to raise. You can call these numbers anytime before 9 o'clock this evening and speak to a community specialist who can answer questions about your mortgage concerns and connect you with the appropriate trusted community resource. Here are the numbers, and I will try to remember to give these out throughout the hour broadcast. The 1-800 number is 568-9099. And in the 314 area code, you can call 512-9090. And again, these are private calls, not calls to the broadcast, but calls for you who are listening to get help. Now, let me introduce our panelists tonight. Again, these folks are dealing with mortgage issues in a number of areas, so I think they'll be able to illuminate a lot of things for us tonight. Chris Krameyer is President and CEO of Beyond Housing. It's a nonprofit agency that deals with a lot of housing issues, but particularly has been dealing with folks who have mortgage problems and who are facing foreclosure. Dan Claggett is here from Legal Services of Eastern Missouri. He is the managing attorney of the Consumer Unit. Robin Kramer here is from the banking community. She's Senior Vice President of Default Management at City Mortgage Incorporated. Reps Hudson is a reporter, has been doing a lot of work for KWMU on the mortgage crisis, and he's been exploring a lot of the local issues here. So we'll be getting some of his observations. Also joining us tonight is James Wright. He is a homeowner who has faced some issues and is taking some steps. And so we're going to want to hear from him about just how he has gone about that, and perhaps possibly not what steps, but what's the first step? How do you begin to deal with mortgage issues and mortgage problems if you're having them? Now, we got a little news today there was a story in the Business Journal regarding some numbers from Realty Track, which keeps track of realty, right, and foreclosures, and it indicated the numbers they have said, well, things are looking a little better. Now, Chris, you've been working with us at KETC since almost a year ago. We've done a town hall meeting. Now we're here a year later. Gosh, we'd like to think it's getting better. But from your viewpoint at Beyond Housing and the people you're dealing with and the numbers you're seeing, are we getting any better?
Well, I think the way we like to phrase it is it has leveled off, but it's leveled off at crisis proportion. So we couldn't keep having yet another month of the highest number of foreclosure starts or foreclosure activity ever. So at some point, it did have to level off, which it did toward the end of 2008 into 2009. Particularly, there was a wide variety of moratoriums that were put in place by a whole number of different players in the marketplace. But those moratoriums have ended. We've seen the regrettable job losses all across the country and here in the region as well. I talked to some folks in St. Louis County Planning Department, and they said the last 2 months the trend line for St. Louis County is going up. So, no, it's not the worst thing ever last month, but it's still awful bad out there. Lots of folks are in trouble. Our phones are ringing off the hook, and the same is true for our other counseling agencies that we work with.
I want to go through the panelists here to get a sort of an update. Again, when we started this project at KETC and with KWMU, we were just learning about subprime mortgages and mortgage problems, and then all of a sudden, within a matter of weeks, we were talking about a worldwide financial crisis. We know a lot more about what happened, but there are more developments here. And Dan Claggett from Legal Services, how are you viewing this? Is it the same thing, or do you see changes in trends in terms of what people are coming to you with?
Well, in terms of the numbers, our number of clients that we're seeing is up, but that may be because we've gotten a grant to hire a bankruptcy attorney and do foreclosure defense, and as a result, more clients have been calling for that service. In terms of the types of cases, what we have seen is in the beginning, many clients were coming with very high interest loans, and now it's like in the 12%, 13%. Now it's not so much of that. They're lower interest rate. They're still not, 4% or 5%. They're more like 8 or 9%, but still a problem making their payments, and certainly loss of income from jobs, etc.
Clarify for me at Legal Services, are you dealing with people who come in and say, I've been ripped off, or are you dealing with people who say, I just need some legal work to get out of this situation?
We deal with both, and I concentrate in the area of predatory lending and a lot of mortgage fraud, but my colleague Lynn Travis, who does bankruptcy, helps clients who are faced with foreclosure by doing Chapter 13s on her behalf. So those can be a mortgage with no problems whatsoever, other than that the client can't afford to pay.
Robin Kramer, you're in the banking business. City Mortgage makes loans and services loans, and you can explain a little bit about that. But what's exactly the role here? And again, what's happening in your business?
Our business has gotten very busy. When you say the foreclosures are down, that to me comes to mind. There's some very important reasons around that. Part of that is all the initiatives that the banking community and lenders and mortgage companies have instituted to help borrowers who are in crisis with a lot of loss mitigation programs and outreach. At City alone, we have hired over 1,500 additional just loss mitigation agents to talk to customers to help them. The communities and the jurisdictions across the country are trying their best to implement changes to help slow down the foreclosure process as well, to give those customers more time to reach out to their lenders.
Have the banks and the lenders had to make changes besides additional people to deal with this? But, we have heard in some of our other meetings and conversations that you just can't get through to people.
That's true. Customers, as Chris said earlier, customers are oftentimes ashamed, embarrassed. They don't want to talk about this with us. And I can look at accounts day in and day out of hundreds of letters being sent to customers just asking them to call us so we can talk to them about what solutions may be available to them, calling them on the phone repeatedly, trying to get them to pick up just to talk to us and explain to them what we can do to help them. And those customers that are not interested or they're afraid to talk unfortunately get to the situation where it's too late for us to help them.
And again, we can get back to some of the particulars, but Chris, when we started with you a year ago and we said, what's the best advice? You said, open your mail and answer your phone.
It's still exactly true. Again, I think there's a mistaken notion that when someone like Robin's firm calls that they want to come and take your house. Well, the reality is folks make money when you pay your mortgage. That's what they want you to do because that's good for everybody. I know it's hard. I know it's hard to differentiate between, oh, my God, I don't have a good answer. Well, you know what? Because of the size of this problem across the country, as Robin said, and a lot of other servicers have added lots of staff to do what we call loss mitigation. It's not collections. It's figure out how can we work with you as the homeowner to live up to your financial obligations, and how can we work with you and be more flexible than you may thought we ever had the possibility to do. Lots of new programs. The Obama administration has some new things out there that are very helpful, starting a little bit of traction. So again, it's scary, it's frightening. We understand that, but if you don't fight for your home, you're going to be in trouble. We urge you, call right away. Call the 211 number here in the St. Louis region at the United Way. They'll get you plugged in. You gave out some numbers earlier. I urge your listeners to, again, take advantage of that. Call now. The quicker you get started talking to someone, the quicker we can find a solution to keep you in your home.
And I got to say, only public radio and public television would say, turn off your radio and go make a phone call. So I'm going to give you those numbers again. And again, these are the numbers for the counselors at Channel 9 who can answer some of your questions, maybe put you in touch with the proper agency. 1-800-568-9099. And the 314 number is 512-9099. 90. That just goes right to Channel 9. These are local folks. And again, this is not for broadcast. This is for you to talk to somebody privately. We were talking about making that phone call, and James Wright is here, and I'm glad he's joined us because James lives in Olivet and faced some issues, right?
Yes.
And how hard was it for you to get started?
Anxiety and fear almost paralyzed us, but we were able to compensate for that by looking for someone to help us.
And what was the response? I mean, what you hear a lot is, I got on the phone and they put me on hold, and you got to have a lot of time to deal with these. How, I want to say proactive. How proactive did you have to be? How much did you have to push to begin to get some answers?
Well, we were motivated first by our being very proud of our community and very protective of our investment. And from that, we began to engage the mortgage company to find out what parameters that they had set that we need to follow. And then from that, once we found those parameters, we began to look for those agencies with mission statements to help us and connect with the resources that we needed.
And I'm guessing as a homeowner, I mean, if you got a mortgage, it's 20, 30 years down the line. This is not a quick fix for you.
No. It's a process we're going through. We're in the pre-modification stage. At that point, we didn't know where we were going to be. And so there was a lot of high anxiety and a lot of fear surrounding it. So we took some systematic steps to move ourselves up out of it.
Reps, I left you for last because I say, like me, I think journalists are always educating themselves. They start digging in, looking for certain things. Reps Hudson has been doing stories. I hope you've heard them, and some of them on KWMU, about the mortgage crisis, financial issues. What were your surprises once you started getting into this, Reps?
I think the thing that surprised me the most was that the old evil of greed hadn't gone away. It was still there.
Whose greed is that?
Well, that would be the greed, I think, of people who would push innocent people or people who are unsuspecting into rewriting a loan, taking a new mortgage. I worked with someone here. I had an assistant, Christina DeVos, and we worked together. And I thought it was really heartbreaking to hear some of the stories these people had to tell us. They refinanced because, basically, one woman refinanced because she was just being pressured by so many people. She finally just gave in. And she signed up papers that basically said that her loan was going to kick up in interest rates. Now, her home was almost paid for, but she started over. You could say, well, she wasn't very smart, and maybe she should just, that's the marketplace at work. But I guess what really surprised me was that someone would prey on a person who was like in her 60s or 70s and who lived alone, that someone would do that. That really bothered me. I didn't understand. I mean, I realize there are bad people in the world, but I just thought maybe this wasn't still going on. But we found it to be fairly rampant.
Are the scams, Dan, you deal with some of these legal issues. I always figure you catch one scam and the market changes and somebody designs a new scam to meet the new market. Do you see that happening?
Well, to a certain extent. I mean, one of the scams that the Attorney General, I think, has cracked down on is people who are advertising that they're part of the Obama administration HAMP, or Home Affordable Modification Program, that they're offering this deal as part of the government and enticing people to pay money for that service, which is misleading and wrong, and I believe the Attorney General has stopped that. But that's just one example. Yeah, I think they'll be constantly, the crooks are out there, and they'll continue to find a way that they can to rip off people, unfortunately.
And I think this is the important thing. And when KETC started this a year ago, we said, what's the most important thing we can do? And we thought it was to offer people some choices of trusted places that they could turn to. And, we bring up an interesting point, and I'll go to our banker, Robin, because, I bought a house, and I signed, I don't know how many papers I signed, but I got to tell you, I don't know what they were. This was a while ago. I mean, how do you, I know you want to make a loan and you want to collect on that loan, but do you feel it more important now that people get a sense of what they're signing and they know what they're getting into?
Well, I think it was always important. I don't think it changed now. It's not any different than it was 50 years ago when somebody bought a house and got their mortgage.
Do you find people coming in maybe a little more wary and more willing to look at what they're signing, or is it pretty much the same?
I am more on the default side, so the origination piece, and it's much smaller now. I know there are programs and pieces of that process, and the awareness, the education out in the community, out in the country, telling people to know what you're looking at, to know what you're signing, to understand what that's all about, and don't just sit down and sign a stack of papers because the person sitting across the desk from you is in a hurry and they've got to move on. And trust me, don't worry, sign these. But the other thing that is important here is that when someone wants to buy a home, they're looking for someone to help them find their dream home, to finance their dream home, to get them into that home that they've always wanted or they've found is perfect for them. And so the bank, the mortgage company, is that dream maker, right? And they make that possible. And there are a lot of institutions out there that do the right thing and that make the right kind of loans for the customers. And when they become in crisis, we end up being the guys they don't want to talk to.
Let's talk a little bit about how quickly that crisis can build. And Chris, you've talked a lot about this. You kind of taught me pretty much what I know about this. But one of the problems, and now I know the law is still different in different states, but this foreclosure process can go really fast.
Absolutely. And Missouri is the second fastest state in the country relative to having that occur once that bar reaches that trigger point, which is normally 90 days late. And once that happens in Missouri, you can literally be foreclosed in 20 days, which is a mind-boggling speed in which something happens. And just real quick, Missouri is a non-judicial state, which simply means there's not a judicial process that you go before anybody. It just happens, and the owner of your loan has the right to foreclose upon you. So again, that's why we urge people call right away. Do not hesitate. You may not have an answer to how you're going to get back on your feet, but if you call and start the process, folks are going to be willing to work with you.
I have a specific question that relates to this, and see if you guys can help get an answer. For people who have lost their jobs temporarily, and that's becoming a bigger part of this issue. It's not necessarily bad loans, but people losing jobs, getting hours cut back, they can't make their payments. But the question is, for people who have lost their jobs temporarily, do they lose their homes if they are not able to pay the mortgage in 3 to 6 months? Does it help to pay part of the mortgage?
Yeah, I think look, what you need to do again is to call and reach out and talk to your lender and servicer. I know City has a great program. If you've lost your job and you talk to them for the next 3 months, you only pay $500 a month, and there's other programs like that. They're beginning now to look at, because of the extension of the unemployment benefits, that we can look at unemployment if you have it for at least 9 months. That can be considered income in doing a loan modification. So you certainly, again, in every situation, call and reach out. We know job loss is hard. We also encourage people, don't spend all your assets, don't spend all your pension, all your savings before you call. Make the call early. Yes, I know you don't have the job that you want. Your income is not there. But again, if you begin the conversation, again, the whole industry, both from the not-for-profit counseling side to the lender service side, is motivated to work with you.
Milton, we're going to ask you your question, let you ask your question. So we'll get the microphone to you, and we'll have you ask your question in just a moment. Reps, what are you seeing in terms of this big picture in the St. Louis region? Again, as I said, we start out saying, it's subprime loans. Are you seeing that the local economy is now driving this crisis maybe even more than bad loans were?
Well, from what I understand from the people I talk to, yes. As more people in the middle class lose jobs, most of us are depending upon two income earners to make our mortgage payments and to live. And if one of those people loses their job or both lose their job, then it's trouble really quickly. And I think that's one of the things that's been going on. Somewhat the market stabilized here, I think, in terms of maybe we're not losing jobs as quickly as before, but when you've got the auto plants closing, you have the subsidiaries related to the auto plants, all these kinds of things are going down. It's harder and harder for people to make their payments. And another thing, I'm a very simple person, and I learned we had to relearn some basic things. If you don't have money coming in, it's awfully hard to talk to people about how you're going to make your mortgage payment. So I heard again and again, people have to bring in money. They have to go out and work.
We're going to talk a little bit, I think, about some of that financial planning. But we're talking, James. I hate to ask you personal questions, but you're sitting up here on the panel.
Yes.
What happened to you? How did you get into trouble on your mortgage?
Well, I would say it's a perfect storm of my unemployment and my wife's illness. And at that time, the hardship became critical where we weren't able to make the payments.
So you bought a home. How long had you been in the house?
Oh, we've been in our house for 10 years.
And this is not an unusual kind of story, I would guess. Robin, you must be getting folks, it's not necessarily folks who bought last year and really messed up, but you're probably getting folks coming to you who've been in their homes for quite some time, yeah?
Absolutely. We have customers who've been in their home for 10, 15 years. As Rep said, one has lost a job. Maybe the other one is a stay-at-home mom or dad, and that income is significant. We definitely see customers who are just in their homes and all their planning and all their dreams a year ago when they bought their home have come crashing down because they've lost employment or reduced income or illness.
So let us know. If I come in, can you help me? How do you go about if I come in and say, I've been paying this off for 20 years, I got 10 more left, we just lost a job. What's the process if I come to my lender?
Well, at Citi, the process is that you get on the phone with one of our loss mitigation specialists and talk about what your plans are. This is a partnership. It was a partnership when you bought the house. It's a partnership to get out of the situation. And you have to be motivated. So what we want to know is, do you want to stay in your house? Do you want to resolve this default? Coming to us and talking about that and being candid and forthright with what your expenses are is really important, and coming to us very quickly. The longer you wait, the harder it is. The longer you wait, the harder it is for you as well.
So here are those numbers again. If you're thinking, gosh, maybe I ought to make this call, at least the initial call, we've got a couple of phone numbers you can call to people who are over at Channel 9 answering your calls. This is not coming on the air. This is just for you to talk to them personally. 800-568-9099. 314-512-9090. These calls are being answered here in St. Louis. Milton, I want to hear your question. Milton's sitting in the audience and has a question for us.
Yes. My question is more concerned towards us seniors. And we're not dealing sometimes with being unemployed. We're dealing with having a fixed income. And some of us are also paying on the mortgage. So the question I'm asking is the reverse mortgage being offered as a solution to help us seniors to be able to stay in our homes?
Anyone, Chris?
Yeah, again, I think when we look at the customer that comes in, we're looking at all options. And if seniors come to us and we think the reverse mortgage is a viable option, we'll raise that with the lender servicer and see is that something that will be an option so we can help that individual or that family get out of that current situation. I think the counselors have a toolbox of things that they try to deploy. Looking at each situation is different. Everybody who comes to us has their story, so we'll certainly look at that as one of a number of possible options that we can get that family or get that person out of that situation.
It's not a simple yes or no question. It depends on the individual. Reps, you've been looking into this a little bit yourself.
Christy and I covered a hearing about this that Senator McCaskill held in University City, and one of the things that we heard pretty loud and clear is that everyone ought to be very, very careful wading into this water. It's not that you shouldn't do it, but that you should be very, very careful, that you understand fully everything about the contract you're going to be writing, so that no scams occur. And this is kind of part of a larger theme, which is we all really need to examine everything we do very carefully.
Yeah, but I'm not a lawyer. That's the problem.
Nobody is. And
no, Dan is.
But
And Dan's home number is.
But the point I guess I'm trying to make here is we all need to think of having a guardian angel or someone to watch after us and help us make these decisions correctly, and that's a very hard thing for many of us to do.
And I think there are organizations like Beyond Housing or others that provide, particularly if you're a first-time home buyer, if you're thinking about doing this, there are organizations who can help you do this. I think we've kind of gotten away from looking to that kind of guidance to make sure you understand the bevy of paperwork, you understand the terms and conditions. You can ask for that, and you can press for it, but sometimes you need to have someone else who doesn't necessarily have skin in the game, because part of the problem that got us here is the non-regulated folks who are making a bunch of money. We're rushing you to get to the closing table. We've got to try to find a new systemic way to say if somebody wants to buy or refinance, how are we ensuring that at least we know they've had some contact with somebody who has some information.
Here's a question from the audience, and I'm going to read this one. I lost my home well before this new wave of foreclosures, lost the home in 2000, 2001. This person's concerned about reentry into home ownership, what the impact is, the consequences, and what's the timing? If you've lost a home through foreclosure, can you get back in? And how soon?
The answer is yes. Each situation will be different. It's not impossible. It's certainly harder. Certainly the underwriting has become a little more conservative the last year and a half, 2 years, but it's not impossible. And again, one of the things you do is then make a phone call. Talk to a regulated institution like a city, like a Bank of America, and say, "Here's my situation. Tell me what's the possibility," and they'll work with you, saying, "Here's what you need to do, short term, long term, to get you back in that situation, so you can live out your part of the American dream again."
I would just add to that I think they should also get a copy of their credit report and do what they can to improve that and make sure that the information on that credit report is accurate.
And how do you get your credit report?
You can get it for free by calling. I don't have the number.
It's the one that advertises?
Well, I don't.
See, that's what I want to know.
Yeah.
Okay, so somebody can tell you. Can your banker tell you how to get your credit report?
Sure.
Okay.
I mean, contact your local banker or who you do business with today. Go in and talk to a loan officer and find out what's available for you.
I got to be honest with you. I mean, this is just me. Maybe it's because I work in public TV. But if they're advertising, I'm thinking I don't want to call them. Now, I don't mean to disparage everyone who advertises, because there's some good businesses out there. But I think that's one of the things that kind of freezes people into not making a call. James, when you went, how did you know who to call? You're getting help from a nonprofit agency, is that correct? Yes,
a number of them. We looked at the mission statements to see which ones were targeted towards our specific situation. And it's a tricky thing with that budgeting financial analysis thing. And that's one of the big things you need help on as you're going through the budget and financial analysis, because you have to have a positive income before you can move to the second part of actually even getting any help. So maybe the banker can talk a little bit about that process, because that's the tricky part.
Well, the thing is, for all you guys, nobody's going to hand you money. If I come in and say, "Hey, I'm a couple of $1,000s short, Chris or whomever," you're not. It's not likely anybody's going to hand you a couple $1,000.
No, but I think the important thing is, if you're behind and you're in a hole and someone wants to charge you, there's a problem with that, right?
Right.
So, because there's a whole bunch of folks out here, Beyond Housing, the Urban League, Catholic Charities, Better Family Life. Our role is to help you out of your situation. Do not be fooled. Do not be tricked into paying a ridiculous amount of money to someone who says, "Oh, I can help you out of that." Well, if you're $2,000 behind on your mortgage, why are you going to give this firm $1,000? If you had $1,000, pay your mortgage. Get caught up. Begin the process of saving your home. I think regrettably, I'm willing to bet that if we look at the aggressive marketing and the slick ads of the foreclosure scam artists, they look a whole heck of a lot like those subprime lenders who were around 2004, 2005, and 2006 using the same kind of strategy. And I urge people, do not be fooled. Do not pay for foreclosure assistance. There are people out here who will do it for free, no matter what your income is.
You're listening to a live town hall meeting on 90.7 KWMU. I also want to remind you that there are some folks standing by to answer some phone calls to help you with some issues, give you some advice. These will not be calls coming to the broadcast. These are just private calls. Let me give you the numbers. The 800 number is 568-9099. The 314 number is 512-9090. Again, these are private calls. They're being answered locally. Reps, you've been, as we were talking along the way here, you looked like you had something to say.
Well,
And you'd better now because I've asked you.
Okay,
So.
yeah, I know. I'm on the spot. Chris mentioned the word American dream, which kicked off something that he told me and other people said too, and maybe it is that not everybody should be in a home. Not everyone should be buying a home. And that's another thing I learned, because one of the things that we have heard for so long, I think it's part of our culture to believe that everyone should own a home. That's part of the American dream. But in fact, I think that's probably not necessarily feasible. And maybe we've learned from this crisis that there are people who were kind of pulled into the home ownership ranks who probably shouldn't be there because their income doesn't sustain it.
It used to be that they said, 20% down on a house? Is that right?
And pristine credit.
Right. Robin, is that changed, or would you still advise people to go ahead and save that $40,000 to put down? Is that still the best way to go? Is that still the standard? It's not the standard for everybody, obviously, because a lot of people were getting loans for a lot less than that, buying more than they could afford, buying bigger houses than they needed.
I think it's a personal. I don't think any lender can direct you to how you should get in that home. I think it's a personal decision, and you really need to think about how I can afford this house. Is the down payment, and that is your investment into that house, and that is your commitment to that house. If you don't have any money in that house and you're buying it with no or little down, it's easier to walk away from it.
And depending on two incomes just to make that payment.
Correct.
That's going to be, and Chris, you must see that all the time. People were making the payments, but just barely for 10 years or 5 years, and now, boom, that margin of error is just gone, right?
So many folks borrowed the absolute maximum that they could borrow under that particular scenario versus saying, what happens if, and fill in the blank with all of life circumstances that occurs, whether it's through job loss or through illness or through divorce, or last I checked with my kids, they kind of cost me a few nickels and dimes on a regular basis. So you have to be prepared and don't cap yourself so high that you don't have any flexibility. That you can't be ready for the rainy day, because it will rain. We don't know when it's going to happen. We don't know how it's going to happen, but it will indeed happen. You live in your home long enough, guess what? The roof's going to start leaking. You're going to have to replace the furnace. You got to buy a new stove. Where's that going to come from? And if you leverage yourself so high that you have no wiggle room, you're asking for failure, regrettably. And so many folks wind up doing that, and that makes it that much harder to get them out of that.
Here's a question from the audience. Once a homeowner realizes they may be involved with a less than trustworthy firm that is helping them with their mortgage situation, who do they turn to get help? How do you extricate yourself from a bad organization? How can you transfer that to a reputable organization? Or are you stuck? Dan, that's kind of a legal services question.
Right.
So.
No, I think that give us a call if you're a low-income client, or give us a call and we can determine whether or not you're eligible for services, or call any lawyer, a consumer lawyer, and have them review. If you've signed a contract with that client, bring it to the lawyer. Let them review it. I just was involved in a situation like that not too long ago. We were able to get the client's money back. But if there have been misrepresentations made, that's where the lawyer can be very helpful in advocating for the client.
I mean, at the end of the day, it's your money. I mean, don't be too frightened or timid or worried about what the repercussions are. This is your money, your investment, your family. If you're uncomfortable, back away and find someone who can help you. Say, I'm not comfortable in the situation. I don't want to make a large financial decision unless I know it is right for me and my family.
Reps, as you talk to people about this, do you find a greater sense of awareness? You hear people saying, boy, I'm not going to do what they did, or what my friends did, or what my parents did.
Well, I have to say, I think this whole campaign has been wonderful because it is making people aware of it, and it's doing it in a way that's fairly neutral in the sense that there's not an axe to grind one way or the other. I think people are becoming aware of it, and I'd like to add that I think one of the things that we found when we talked to somebody at the Federal Reserve Bank was that as a society, coming out of one of the biggest booms in American history, we went into one of the biggest dips or recessions in American history, at least in recent years. We've all learned some basic lessons. And that's kind of interesting because my parents went through the Depression, but I didn't go through the Depression, and I think about things very differently than my parents did. Now I've learned a lot, and I think a lot of other people have learned a lot too. And I think we're all going to be a little bit more cautious, which is probably a good thing.
It's a question for Robin. Can you briefly talk about President Obama's plan making homes affordable? And I can broaden that to everybody in terms of some of the federal programs that are going on. But let's talk about that in particular.
Well, the one that always jumps out in my mind is the HAMP program, and that is something that we're very, very involved with at Citi and many other lenders. Outreach to our customer base, customers who are delinquent, and soliciting them to call us again. Reach out to us, let us know you're there, let us know you're interested. And there's a very simple in this environment calculation to determine if your payment should be lowered. And if you qualify for what's considered our trial payments, which is the 3-month period of this new payment amount, to see if you can fit it into your budget. On paper it says you can, but you need to work through that for 3 months and then roll into what's a modification. That is the biggest piece out there right now, and most apparent for customers who are reaching out to us. There are several options if a customer doesn't qualify for that HAMP program, and as Chris said, the loss mitigators have a toolbox full of resources to tell them what options would be available for the customer. It's not just this is the only one, and if you don't qualify, pack your bags.
And one of the easiest ways to find out if indeed you're eligible is if you go to makinghomeaffordable.gov. They have a real simple process where you can click on "Am I eligible?" and they'll ask you a series of questions to find out are you indeed eligible, and then you can begin that process. It's the first program coming out of D.C. that really has some possibilities to really do some large numbers, to get some traction, to really be useful to all of us who are on the ground who are helping homeowners stay in their homes. I think they've helped about 240,000 folks across the country to date, and they're looking at 2 to 3 million over the next 2 years or so. So again, it's makinghomeaffordable.gov. Take a peek at it. It's easy to walk through. It's not complicated. And then get to your housing counselor, talk to your lender, talk to your servicer, and let's begin the process to keep you in your home.
Robin, is it true what Chris says, that you don't really want my house?
Absolutely. I do not want your house. I don't want anyone's.
Well, what is actually the cost to a lender of a foreclosure? I mean, what do you do with that house?
It's a tremendous cost, and as the market becomes saturated, the value of your house drops. So you and your neighbor, a community of people who have lost their jobs and who have not reached out to their lender and end up losing their homes, really deteriorates the value of that neighborhood. The cost of your home, if we foreclose on it, is to carry it through REO in the tens of thousands of dollars. And if your value of your house is less than what you even owe, we're much farther in the hole. I approve foreclosure bids day in and day out where we're losing hundreds of thousands of dollars on single transactions because of that. So we don't want your home. We want you to stay in your home. It's your dream home. It's not mine. I have mine. And
that's why many lenders are willing to work.
Absolutely.
To keep you in your home, even if it means spreading the payments out or whatever. But you're just going to negotiate. But you're not making a promise here.
No, I'm not. But if that's the right thing, and as Rep said, not everyone can stay in their home. Not everyone can afford a home. It's not just that mortgage payment. It's your taxes. It's your insurance. It's all your maintenance. It's mowing the grass so you don't get citations. I mean, there's a lot to being a homeowner, and people need to be very aware of that. It's not a simple process.
Another question from the audience, and I appreciate you guys sending up your questions. I understand that there are now securities vehicles being created again to allow selling and trading of lower-rated mortgages. What can the average person do to educate themselves and push for protective legislation? And that leads to a bigger question about legislation. But let's ask about some of these low-rated mortgages and how they're being packaged and what those rules are. And we could spend another couple hours just explaining what all that is. But where are we in terms of legislative measures?
Well, I mean, one to respond to the question, the easiest thing from our estimation is go to a regulated bank who has oversight and who is not allowed to do all these crazy things that a lot of these derivatives and these credit default swaps, all these things that all of us say, oh, I've heard that. I don't really know what that is. Go to a regulated bank. Go to the big banks. Go to Citi. Go to Bank of America, U.S. Bank. Lots of banks in town want to lend money because when they lend money, they make money. What we do in D.C., I think we have to talk to our senators and our reps and say, we're concerned that we're sliding right back into the same kinds of things that got us into the problem. We've not radically changed what's out there. We've not radically altered things. And we have not said affirmatively, we don't necessarily need a whole lot of new regulations. We just have to really enforce the ones that we have. that kind of be a good thing and make sure we have enough enforcement capacity to make sure that happens so we don't slide back into, oh, we forgot what happened a couple of years ago and we're easing into this new product and this new thing that everyone swears is going to be fine and it'll be good and everyone will make a lot of money at it.
Yeah, Dan Claggett from Legal Services, if you could write a law for the state of Missouri or for the country, what would it be?
Well, one of the problems, and just to sort of back up a minute, in terms of securitization, I mean, that was the problem that got us into this huge mess that we're in now, where all these millions of loans are packaged, and there was a push from the top down to get these mortgages, and therefore the underwriting just sort of went out the window. And it was the big banks that packaged those loans. So I would have to disagree with Chris as far as who you go to. As far as a legislative solution, I know some of the what has been proposed, I believe even in Missouri, was to put a fiduciary duty on mortgage brokers. Right now, most people get their loans through a mortgage broker. And the mortgage broker, they usually have the borrower sign a contract which says that he is an independent contractor. The difference is, if a fiduciary duty is that the broker has to act in the best interest of the borrower and disclose all material facts. So that's one proposal that was put before, I believe, the Missouri legislature. I don't think it passed.
So let's say it again. So right now there is no obligation for a mortgage broker to work on the borrower's best behalf.
That's correct. Because
again, I think it's real important, because I think most folks assume if you're sitting across the table getting a loan, that person has my best interest. He's trying to help me get my home, and the reality is there is no legal obligation for them to do that.
Reps Hudson has been looking into this, I guess, with KWMU.
Yeah. I'm about to jump out of my seat again. I mean, this goes back to basic stuff. I mean, there's the person across the table from you isn't working in your interest. In Missouri, which I think is in many ways behind the curve on this. I mean, Chris mentioned it. It's not a judicial state. It's an administrative state. Things happen very quickly. There's very little protection for residents in apartment buildings that are being foreclosed and so on. So we need to have better regulation of the whole process. But I think there needs to be some sort of guarantee, I guess, that a borrower has somebody beside them to sort of go over things and help make sure they're not being scammed. And this comes under, I think, the rubric of consumer protection. And I think that would be a good thing to have.
Let's just describe again when we talk about Missouri versus, say, Illinois. When you say it's a judicial process in Illinois, it usually means somebody has to take you to court to kick you out of your house. Is that correct? In Missouri, you don't have to do that. Is there any effort? I mean, we were talking about this a year ago, because I didn't know anything about this a year ago, and now I know a little bit more. Is the legislature talking about that? Is there some effort to change it, or do we not need to change it?
From Beyond House
That's an opinion, obviously.
I think from Beyond House perspective, we do need to change it because 20 days is not long enough. Does it need to be a full-blown judicial process that can take up to 18 months? We don't think that necessarily is appropriate too, but certainly 20 days is not enough. We need more time to talk to that borrower, to talk to lender services, to see what we can do to keep that family in their home. There is zero, and I mean zero, interest in Jefferson City to even begin to tackle this because the special interest and the lobbying folks will absolutely come out of the woodwork to prevent this from happening. We've floated a couple of trial balloons the last 2 years, and they've been shot down relatively quickly. Sort of industry folks don't want to change anything, like it just the way that it is. And I think that's a sad commentary, but certainly that is true. And when I say industry, it is certainly not, again, the folks in the regulated world. If you're in a regulated world, look, you're getting reviewed all different kind of ways. It's the folks in the unregulated world that they're allowed to operate in Missouri that says we don't want any part of that. We like it just the way that it is.
Right. Reps?
There's no lobbyist for the borrower. The borrowers are individual people. The people on the other side of the table are all part of an interest group. Just like Chris said, I mean, they're lobbyists. They know how to work the system. You're an individual up against a pretty sophisticated group of people. That's not a fair fight.
Robin, as the industry representative, and I know you're not the lobbyist, and maybe you can't speak for the company on this, but is that quick process in some ways something of a problem for trying to work with people? Or or not? Are you working fine within that 21-day process?
Well, I haven't seen the foreclosures go quite that fast here in Missouri, and even though Chris says it's a 21-day or 20-day process, that's if everything's perfect.
And probably after you've missed several months' payment.
Oh, absolutely,
right.
absolutely.
So it's not 21 days after you miss your first payment necessarily.
No, at City you've missed 4 payments before you even are placed into foreclosure. The time frame is irrelevant if you pick up the phone and talk to us after you've missed your first payment. If a lender wants your home, it can take 21 days or it can take 21 months. They're still going to have your home if you don't reach out and make some effort to do that. So, for my opinion, I wouldn't change the law because whether it's 21 days or 4 months or 10 months in the foreclosure process, if you're reaching out to me, I'm going to put it on hold and I'm going to wait and work with you.
So we'll go back again. The important message is make a phone call if you know you're going to have problems, or if you've missed a payment, you better make a phone call. Call the lender, call the servicer. That is the person who's collecting the money for the lender. Or tonight, if you're listening and you've got some questions, you think you need a little advice, a little guidance, call a couple of these numbers. These are going to the same place over at Channel 9. It's an 800 number, 568-9099. The 314 number, 512-9090. There are folks there who know all about this. They'll take your calls. This is private. This isn't for broadcast. And ask them what you should do. That's a good place to start. You are listening to a live town hall meeting on 90.7 KWMU on Facing the Mortgage Crisis. Red tape, that's the question. There's just a lot of stuff you need to cut through. James, as a homeowner who said, I got to do something, boy, how do you figure out how to deal with all those rules? All those papers you signed, you miss a payment, it's not you can't sign the check. I mean, it's a daunting thing to think that you're dealing with a company with all kinds of lawyers and collection agencies and this, and it's pretty much just you. How did you deal with all that? You said you did some research. How did you do that?
Well, yes, I did some research, but one, I was lucky enough to in my mortgage lender, which was U.S. Bank, come across a negotiator by the name of Pam Rather, who was very personal and professional.
So you called your bank?
I did call my bank.
And somebody answered the phone?
And somebody answered the phone.
Okay, good.
Also, we were motivated to do that. We were motivated to be proactive.
Being?
My wife and I.
Okay.
To be proactive and do something about it because we are very, I guess you say, proud of our community and protective of our investment.
So you didn't wait until you'd missed 3 or 4 payments. You saw it coming?
We missed a couple of payments before we called.
Okay.
Because we're trying to make those payments. You don't sit back and say we're not going to pay. It comes up and you can't pay. And so when you can't pay again, then you begin to, we need to find someone to help us navigate through this. And yes, I did call my lender, and they set the parameters, and then I began to look for agencies that could help us.
Right.
But
so you went outside the bank as well. You're dealing with a nonprofit agency who's helping you with this as well.
Yes. And one of the things is that there's no HUD-approved counseling agency with staff on staff enough to talk with the banks all those hours. They don't have enough staff to do that. So you're going to have to take that and do that yourself. You're going to have to talk to your bank. But one of the things that the agencies can do for you is give you the network of resources and the how-to about other things in regards to that.
How much of a relief was it when you started feeling like you'd gotten some answers?
It was a big relief. It didn't come quick. It took a month or so. But when we began to get those answers, it was a big relief.
Chris, he mentioned the HUD-certified housing counselors. You're one of those. You can't. Well, what are your challenges in terms of staffing and the ability to handle all the problems that are out there? Not all of them, because there are lots of other agencies.
Sure, there are lots of us. I think the challenge becomes how do we, one, pay for the 6 full-time staff people that we have doing this and everything it takes to have computers and phones and all that. That we need to figure out where the funding stream. We are a business. We're having to be a business of helping folks, but we're still a business. Have to make ends meet, and that's a challenge. We've been lucky to have lots of great partners to give us charitable contributions as a federal program that we can access to cover some of our costs. But it's hard. It's hard. I'd love to do more marketing. Our challenge is when we do more marketing, guess what? The phone rings. Right, so when the phone rings, I got to have somebody ready to answer the phone. The last thing we want to have happen is we tell you, "Oh, call us. We're wonderful. We're great," and you can't get through to us, and you're frustrated, and the word gets out. For us, what we're trying to get to is this point where through what's happening on Channel 9 and through all our other outreach, if folks haven't seen, there's a bunch of billboards going up. Read those billboards. They give you great information about what to do. They're going to be blanketing the metro region. Take a look at those billboards. Give you information about where to call. Start the process. I hate to be this broken record. If you don't call like James did, if you don't start the process, it's not going to be quick. It's not going to be easy. But this is your home. This is where you're raising your family. This is where you come home every night. You sit around the dinner table, fight for that home, make the time. Take a deep breath. It's challenging. It's hard. We understand that. But unless you start doing that and do that as quick as possible, there's a chance you're going to lose your home, and we don't want to see that happen. And really, the ball starts with you. Once you get it started, there's going to be lots of people who are going to help you move that ball down the field.
I'm going to ask all of you who are dealing with these things, if I want to call, whether it's legal services or Beyond Housing or my lender, what kind of stuff should I have? If I come in to see you, Dan, over at Legal Services, what should I come in with more than just a story?
Well, for us, we like to see the loan documents.
So pull those out if you can find them.
Pull those
right?
out, and because we like to review those to determine whether or not there's been any violation of federal law. And that's probably the main thing that distinguishes us from the housing counselors. Beyond that, we need to sit down with you and find out the story, determine how you got into the jam that you're in, and whether or not you believe you've been misled in any respect. And then I think one of the problems that we see, and Jim, you touched on this a little bit at the beginning, is that borrowers not being able to get through. And I think that has, what we found is a lot of times dealing with these servicers that it's a one-way call. You can call in, but they can't call out. And so that it can be very frustrating for a homeowner who calls in to relate that they want a loan modification. They'll send in all the papers, and then nothing will happen, and they'll continue to get notices from the bank that you missed your mortgage. So then they call back again, and they get a different person and they have to relate the information all over again. So the point is, you have to be persistent if you're the homeowner. It's not an easy process.
Reps is shaking his head like you've heard this story, huh?
Well, it's heartbreaking because you hear these people who are basically spending their entire lives trying to get through to somebody and talk to them, and then they get that person on the phone, they get to establish a relationship, and the next thing you know, that person's gone. Their papers have been moved to another department in the large financial institution because it's in a different stage, and the borrower doesn't understand all that, and then they start over again. I mean, we talked to a fellow who basically spending all of his waking hours practically trying to get people on the phone to talk to him. He develops a relationship with somebody, and then that person's gone, and he has to start all over again. I mean, it's maddening.
James, how many hours? How much of a commitment to make this work for you? And I know it hasn't worked yet. I mean, it's a long-term thing. But how much of a commitment for you has this been? Or have you just handed over the documents to somebody who's taking care of it for you?
No, it's about 4 days out of a week, morning till noon, sometimes after dinner, we can make a couple of calls.
Chris, how do people do that? I mean, that's one of the advantages. If we can get in and sit down with one of your housing counselors, they know who to call, right?
Yeah. Again, I think calling someone to help you, calling a housing counseling agency like Beyond Housing, like the Urban League, like Catholic Charities and Better Family Life, that's our role. That's our function. We're there. We have relationships with the servicers, with the loss mitigation department, so we can expedite the process. It's maddening, I know, and it's frustrating. I don't want to pretend like it's perfect. It's not. There's still lots of issues there. It continues to get incrementally better. continue to move forward to say the systems are getting better, both on the not-for-profit side and on the servicer side. And again, if the homeowner comes to us and we'll give them our list of things that we need to look at and review, then we'll start the process. And we'll make the phone calls on your behalf. We'll do the follow-ups. We'll ask you to do your part, because it's not just hand your paperwork over and then wait for the answer. You still have to be an engaged participant. This is messy. You didn't get here because life is wonderful and perfect. You got here because things happen. So work with us, and then just be committed, knowing there's going to be bumps in the road. But again, this is your home, and you want to fight for your home, and we're going to be there and fight with you. And we know, as we talked earlier, Robin doesn't want your home. Robin wants you to keep your home. And if we all can stay focused on that and work through the difficulties, hopefully that we'll have some good endings to some of these very difficult situations.
I want to give this out one more time for all our listeners. And again, these are phone numbers that you can call tonight till about 9 o'clock tonight. There's some folks standing by over at Channel 9. And if you've got a question, just say, what can I do? What are my options? They'll be able to help you out. 1-800-568-9099. Or local number 314 is 512-9090. Doesn't cost you anything to ask the question, and it's really the first step. Robin, do you see people sometimes just not willing to do the work?
Oh, absolutely. I see people who want to call and tell me their story, and then the expectation is that we're going to pick it up, run with it, and solve the situation, and just send them a note and say, send us this amount of money. I also see customers who are calling day in and day out. They've already talked to a loss mitigator. They've already submitted all their paperwork, and because we have quite a few loans in this process, it takes time to get through the mill. And it's much more time-consuming than one would expect. I would highly recommend, when someone calls in and talks to loss mitigation, ask what's the next step, ask what the time frame is. If you're told the time frame is your loan's going to be in underwriting for 45 days, mark it on your calendar and call back in 45 days. Calling back next week isn't necessarily going to move your file along. It's just going to delay somebody else from getting into that 45-day pipeline. So it's important for customers to understand that we're busy and we want to help you, but you also have to come to the table. Come to the table, get on the phone. When you get an agent, be ready to talk about what's your income, what's the situation, what's happened, what's your expenses. Write them down, have them in front of you. Write down how much your electric bill is. All of your bills and your expenses are really important for us to understand when we're talking to you about solving the situation.
And that's the key. And James, when you went into this wasn't just about how much your mortgage payment was. This was about your personal finances, and people working you through that, and you making adjustments to try to keep that house. Is that correct?
Yes, we had to kind of get a balance about our living standards so that we could fit into the parameters that was being set for us. We looked for agencies such as ClearPoint to do the budgeting stuff. We engaged Peterson's and Beyond Housing, also legal services on some things. So whatever agency at the time we needed, we would kind of call that and get some information from them. One of the things I'm hearing up here as a homeowner, and I don't want to scapegoat the mortgagers, but you talk to loss mitigations and you still get letters and you still get calls from collections. So that makes a lot of high anxiety for you. So that's why you will call again, because collections has just called you. You talk to the loss mitigations person and they've told you certain things that you have to do, but you get a call from collections saying, if you don't pay, we're coming for you. So then you call back. So, I understand that you're busy and there's a lot of caseloads, but we're here sitting here wondering if our investment is going to be taken from us.
And again, we'll end with what we began with. If you got a problem, make a call, find somebody who can answer some of your questions. I want to thank all of our panelists tonight at our town hall meeting on KWMU, Chris Krameyer from Beyond Housing, Dan Claggett from the Legal Services of Eastern Missouri, Robin Kramer from City Mortgage Incorporated, Reps Hudson, journalist, and James Wright. Thank you so much for coming.
Thank you.
And giving us a personal story on how people can begin to deal with this. Thanks to the staff of KWMU and all the folks who've shown up tonight for the town hall meeting. Also to our media partner, where I work, KETC TV Channel 9. Our Facing the Mortgage Crisis community partners, the Metro St. Louis Foreclosure Intervention Task Force, the National Center for Media Engagement, the staff of the Touhill Performing Arts Centers, Lee Theater, and the University of Missouri St. Louis. Funding for this Facing the Mortgage Crisis broadcast comes from the Corporation for Public Broadcasting, the National Center for Media Engagement. For KWMU, I'm Jim Kirchherr. Thank you.